Hi friends, welcome back. So market bulls be in control this week as this was the best week of 2024, which is absolutely insane because you go back to August and we had that crazy crash. Remember the Japan carry trade was unwinding and now we're back to the green again. So what is going on? The bet is that the Fed's going to be cutting next week. And many people in the market are betting a big cut, 50 basis points. It's kind of interesting because I was actually watching the market prediction tick up. So before it was like, hey, it's definitely going to be a 25 basis points, something like that. That's essentially what the market was betting on. And then for whatever reason, coming out today, the market kind of, switched course. Now we're at a 50-50 chance of a 50 basis point rate cut. That's what we're talking about. It was kind of crazy like how quickly that changed. I just saw this stuff going out today, and essentially that's why the markets are green. Overall though, the original assessment was, okay, perhaps they're gonna do 75 basis point rate cuts. So it'd be 25, 25, 25 the next three meetings to close out the end of the year, and then we'll see what happens next year. I've said all along, you could hold theoretically, right? Because the Fed has a couple mandates. One is got to make sure everyone's got a job. The other one's got to make sure inflation's under control. So the Fed would argue, hey guys, inflation is totally under control. We're good that way. Now we have to worry about jobs. And if we're worried about jobs, we want to cut rates to encourage essentially companies to hire more people. We want to encourage companies to borrow more money and get that system going again. One of the things that's interesting as well is like, you look at what the Fed says, you look at what the market says, and then you also want to look at individual companies. And this hopefully helps you understand what's going on in the market. And I'll just be honest with you guys, it is crazy complicated. I'll give you an example. So today, Adobe, the like with Photoshop, and they have, actually Photoshop's their big one, but they have other services as well. But I was trying to get what, they have like Premiere. Premiere's their other one, and they got other stuff as well. But basically, they're riding the AI train also, so they have image generation and stuff like that. And they came out, they're making more money than before. The AI stuff is actually adding revenue for them, but their forecast going forward is pretty weak. So weak enough to where the market sold off. Again, that was down 9%. What's interesting though is when you read through what like analysts are saying, they're saying, oh, this is just temporary, Adobe's still awesome, buy. But it was kind of weird because like, you see literally the market decided, okay, forecast looking forward, not so great, but yeah, then you have all those analysts say buy. So I'll let you be the judge of what's going on there. My bet is Wall Street just wants you to keep buying while they're selling. The other thing too I just thought was interesting, and I talked this before yesterday, I was wrong on my dates, I apologize, and that was on the Boeing strike. For some reason in my mind, I was thinking the Boeing strike might not happen till the end of the month, but I guess it happened yesterday, or this morning. It was like Friday at 12 a.m. So essentially, Boeing workers are on strike. They wanted a 25% increase in wages, and also they want a bunch of other things. So essentially, more control of sort of the things that they can say at work. So I'm sure you guys know the Boeing story is complicated, and there's a lot of moving parts with this. Before we heard that, reports, and we know this, that the Boeing planes are unsafe. We had workers from the inside before saying, hey, the way we do things here are no good. We had whistleblowers come out. We also had whistleblowers pass away. I'm sure you know, unfortunately. And there's been a lot of basically bad press for Boeing and just bad stuff going on over there. So now with the strike, it's 33,000 workers, which is quite a lot. And the workers really want a good deal this time. So I guess back in 2014, they negotiated a deal, but it was done kind of in a shady way. A lot of people were on vacation. It was like a holiday when they did the vote. So it passed 51-49. And one of the key tenets of the last deal that they got was that there was a 4% cap on how much the raises would be each year. And the problem with it is, of course, I'm sure you know, if inflation suddenly spikes, then your pay is not keeping up with, essentially the cost of everything, right? Be it your home, food, energy, etc. So this time around, the workers really want, quote, their pound of flesh, right? We'll see what they get. And so I think this could last a while. We'll see. The other issue as well is Boeing has a ton of debt, like $53 billion in debt. So there's that. So they may have to borrow money to stay in operation. If the strike goes on long, their credit rating will go down. So I think right now they're just a shade above junk rating. So they'll go down the junk rating. And what does that mean? When you want to borrow money, essentially then, people think you're too risky. So you get really, really high interest rates, right? Basically people don't trust you. They're fine, I'll lend you the money, but you're gonna have to pay us a premium for said money. One of the things I think is going to be happening, and this is sort of like, it kind of relates to what we see in Wall Street with the Fed, et cetera, is like there's a lot of companies out there that want to borrow a bunch of money for, whatever reason, to stay in operation, to expand, to R&D, to pay the workers, like any number of reasons. And when borrowing costs are too high, they feel like, hey, can you bring them down, please, please, please? Or there's companies out there, or investors, you could say, that took risky bets and they want interest rates to come down as well. The problem is, though, guys, if inflation is indeed not under control, then it'll never get under control if we keep lowering rates, this kind of stuff. So this is where the balance is, and sort of like people are betting on, okay, can we get that soft landing or not? The bet, though, is that if we are going into big rate cuts, is that we have to do it because we need to encourage, companies and stuff like that to borrow more, to invest, to grow their companies, et cetera. And I don't want to make it seem like that borrowing is bad all of the time. I just want to be honest about like how our whole system works. It's like basically based on debt. That's just our whole system, because the idea is that I get a bunch of capital up front, I can use that capital appropriately, and then that will give us all returns in the future. And it does work out that way. I mean, that's essentially like how the system works, right? And so, for example, say you wanted to start a company, or you had a business idea, and let's make it simple. Let's say you want to open up like the best lemonade stand in history, right? And you open it up and it's small lemonade stand, and you only sell like 10 cups of lemonade a day, but you're like heavily profitable. If you want to expand, though, you need a ton of capital to get that thing to work, and then you have 40 lemonade stands around the city, right? So that capital injection that you would get, sure, you would borrow it and you have to pay interest rate, but because you're so profitable, it becomes a win, right? So that's the bet. The issue, though, is that will customers show up to say buy your lemonade? And this is sort of like, I want to relate it to back when you think about markets. If you believe, and I say if you believe, things are connected to their fundamental value, that's always the bet. And that's why you look at earnings, what are companies making, et cetera, what are borrowing costs and stuff. And so markets are going up thinking, okay, borrowing costs are coming down. And so suddenly, right, companies will be able to grow like nuts. The problem, though, is that, and I keep mentioning, you guys, like when I see that there's, say, strike at Boeing, or workers are still fighting for higher pay, or companies are laying off, I'm just like, okay, I understand that maybe the markets go up and everything sounds great from that side of the perspective, but from like the worker side, things don't really match up because you have workers and consumer side. So that's why, in my opinion, I'm playing it safe these days. I don't necessarily believe every single pie in the sky projection that Wall Street makes. That's why we talk about Tesla as being the prime example of the ultimate bubble stock. Yes, Wall Street will tell you that's an awesome, and they're going to have robotaxis, and they're going to sell lots of robots. But I'll just say this: there are many forces in the market that try to pull the wool over your eyes, that try to sell you a bunch of hooey. I'll leave it at that. And so, as an investor, just always keep a sane head. Don't get caught too much in the hype. And also, I'm also honest with you. Sometimes the hype does work, but it works until it doesn't. And so with all of these things, manage your risk. Switching over to global news, I want to chat with you guys about China. And why do we talk about this? Because again, in order for stocks to go up, if you leave fundamental values, you want companies to be able to sell products. You want people to be able to buy said products. So what's going on with the second biggest market in the world, China? They're raising retirement age, right? So they're worried about solvency of their retirement programs. Let me read this to you. It says, China will raise the retirement age for the first time since 1978, a move that can stem a decline in the labor force, but risks angering workers already wrestling with a slowing economy, right? So same situation in Boeing. You want to keep good relationships with your people. Actually, in China's an interesting one. They always talk about stability. So anyone who's lived over there, you'll know that's always a talk of the government, because there's so many people there to keep happy. It's very, very difficult. This is the policy that they have in place here. So men will retire at age 63 instead of 60. Women will retire at age 55 instead of 50. So they have a difference in retirement ages for men and women. I don't think that would fly in the USA, but that's what they have in China. And then it also says here, that's for ordinary workers. And 58 instead of 55 for those in management positions. So it's a very, very different system than in the USA. And then I guess they're going to phase this in over 15 years. So there's that. My understanding is a lot of the younger workers are unhappy about that. They feel like, and that older workers, like if you're already retired and you're getting benefits, it doesn't really affect you. But younger ones feel like, I've already paid into the system. Why should older people get longer benefits and more benefits than me? So I totally understand. And I just want to share this stuff because it's interesting to hear what's happening in China. There was a statement by the People's Bank of China recently about their current sort of policy, kind of what they're thinking and how they're trying to get everyone to basically start borrowing money again and get the system going. Again, all of these modern economies are based on borrowed money. Listen to this. This is from the Bank of China. It says, we will make maintaining price stability and pushing for the mild rebound in prices an important consideration for monetary policy, and meeting reasonable financing demand for consumption in a more targeted way. So again, it's very similar to what our Fed says. So price stability, that's what they're looking for, but they're in a different situation than we are in USA. They're worried about prices going down too much, right? There's not enough demand. And when things go down, like in price, so like for example, if you know something's gonna go on sale, or you feel something's like too expensive, you just kind of wait till it comes down in price and look for the price that you want. But then like, what if everyone keeps waiting and it keeps going down, right? So it's kind of a game of chicken, or what if no one has any money, et cetera. So essentially that's why the banks are trying to encourage people to borrow money to start buying again and get the economy kind of going in an upwards direction opposed to, you know, declining direction. Here's some more from Bank of China here. It says, policymakers are, quote, preparing to launch some additional measures to further lower the financing costs for businesses and households, right? Get people borrowing and keep liquidity reasonably ample. And it's interesting because I was telling you guys about the Boeing situation. They have a bunch of debt. They want to borrow money. There's actually a lot of companies out there in the private markets, this is in the USA, that are looking to issue a bunch of corporate bonds, basically borrow a bunch of money now, because there's a worry that possibly in the future we could have a credit market freeze. So we'll see. I mean, I can't predict that far ahead, but I'm just saying there is some signs of that. So that's why companies would borrow money now, even though rates are going to go lower in the future. The idea is, well, I better borrow now while the money's there. This is also saying, according to China here, the guidance suggests that the latest figures are amplifying concerns that the economy might struggle to meet Beijing's annual growth target of 5%, right? So that's where they want to grow, and if it doesn't get that way, let's lend people a bunch of money. Deflationary pressure is becoming entrenched, while a housing slump shows no signs of easing, curbing demand for the credit to fund investment and consumption. And again, the language for this whole thing is about, hey, we need to get people spending, we need to keep people borrowing, let's keep this modern economy growing. And that's China. And I just wanted to share these thoughts with you, what's going on over there, and think about like how it affects the USA, and sort of like, we're all talking about this stuff. Now, guys, when we ever have these conversations, I want to make it really clear, and I try to make it really clear in every video. It doesn't mean you completely stop investing. It doesn't mean you hate the market. It doesn't mean you don't build wealth, et cetera. You basically, in this modern world, that's how you do it, right? You participate in ownership, right? You get assets. So basically, think of it this way. Yes, it's true that the workers over at Boeing are complaining about their pay. Totally true. Yes, it's true that American Airlines are complaining about their pay. Totally true. But kind of the way our system works is you want to be part of both sides, right? You want to have a job, get that income coming in, but you also want to be on the ownership side to take advantage of the profits of whatever company that it makes. So take advantage of both sides. Right now, my opinion on this stuff is I think we're kind of too far to the one side, to where if you're on the ownership side, you're reaping in profits and maybe not necessarily sharing enough with workers. And that'll probably balance, well, let's hope so, at least in my opinion. Let's hope so that balances out, because I know there's a lot of people struggling out there that need more pay. But like I'm saying though, if you really want to get ahead, you want to play both sides, right? You're going to be a worker, it's right, it's real. You got to bring a salary in, but you also want to be on the ownership side. And again, take advantage of the profits and the prosperity of the modern economy. So anyway, want to hear your thoughts on all these things. I do appreciate your time, and I'll catch you on the next video.